Good day, ladies and gentlemen, and welcome to the Power is Now teleconference. During today's call, all lines will be in a listen-only mode. If you require operator assistance during the call, please press star, then 0 on your touch-tone telephone. And as a reminder, today's conference call is being recorded. At this point, I would like to turn the call over to the host of the Power is Now, Mr. Eric Frazier.
Good morning, and welcome to the Power is Now teleconference. The phrase, the power is now, suggests that we maximize our potential for success in business and life when we act on information and opportunities now. The present is our future, because the future is only a reflection of past decisions to act now. And we are at our best. We maximize our success when we act now. That's what the Power is Now is all about, folks, acting on information now. My name is Eric Frazier, host of the Power is Now teleconference, and this is teleconference number 84. Again, I am just amazed at how much we've done over the months and years and how quickly time goes by. I'm also the president of the Orange County Association of Real Estate Brokers, a chapter of the National Association of Real Estate Brokers. And please go to our website at ocareb.org, and also the national website at nareb.com to check out what's going on with the national organization, and our state website, the California Association of Real Estate Brokers, careb.org. Learn more about this great organization. In fact, there's some fantastic things going on right now at the Consolidated Board in Los Angeles. Every day they have been putting on some fabulous programming, just promoting Realtors Week and what it means to be a Realtors, which is our trademark name for the National Association of Real Estate Brokers. In fact, today at 3 o'clock, they're having an REO Brokers Forum, and Milt Shaw is going to be speaking and moderating that forum. And so I really encourage you to get out there this afternoon at 3 o'clock and check out that, the REO Broker Forum with Milt Shaw with LPS. Well, I'm also the branch manager, Wells Fargo Home Mortgage in North Orange County. Please consider using one of our team members in your next transaction, and you can contact any member of this team, the Do It Now team we call ourselves. In fact, you can go to our team website at www.thedoitnowteam.com and check out, our loan consultants. Talk with them. If you have language needs, we have people who speak Spanish and many different languages, and we can help you close your transactions on time. So we really appreciate considering Wells Fargo as, especially being me, the moderator and host of this teleconference, providing you each and every week great information that we hope will help you build and expand your business. Please go to wellsfargo.com/mortgage if you're outside of Orange County to get in contact with a local mortgage consultant, and I promise you will not be disappointed. Ask them also about the close on time guarantee. We actually put our money where our mouth is when we say we're going to close on time. If we fail to do so, we will actually make your borrower's first month's principal interest payment. We actually write a check to the borrower if it's our fault for not meeting the close of escrow date. And that's something we're really proud of. It's something that keeps our feet to the fire. It really does, in making sure that we are moving the loans through the pipeline and closing the transactions on time. Well, the Power is Now teleconference is a series of teleconference meetings designed to empower our real estate agent partners to sell more homes, expand their business of buyers and sellers, to be well informed about changes in lending, government programs, marketing strategies, anything regarding real estate that may affect your clients and your business. Please email me or call me if you have any questions or comments about this program. Our goal is to provide, great information to you every single week that can truly help you. You can reach me directly at 1-800-261-1634, extension 741, or you can contact any team member at our Do It Now team website. You can also email me at eric.frazier@thepowerisnow.com if you would like to be added to the mailing list. I want to encourage you all to go to our website. It's a Facebook website, and you can actually click like and share it with all of your other Facebook friends and realtors so they too can benefit from this great information. In fact, our subject today is on the website, and you'll be able to follow along with the PowerPoint presentation that's posted there now. Next week, Sharon Bartlett, Freddie Mac, Director of Vendor Services, is going to be on the teleconference, and I'm really excited about that call. In fact, the subject is Freddie Mac seeking qualified listing brokers. REO experience not required. Did you know that? REO experience is not required to be a Freddie Mac broker. I learned that just a few weeks ago, and so I'm really looking forward to having a very deep conversation with Sharon Bartlett about all the benefits in working as an REO broker with Freddie Mac. I want to thank Shelley Coffini and for being with us last week. She is a consummate consultant, if you will, business strategist. Shelley knows her stuff, and if you are interested in working with her, please reach out to her directly at 949-922-3698. That's 949-922-3698. Or you can go to her website, Shelley Coffini. That's SHELLYCOFINI.com, and talk to Shelley. She is an expert in short sales, REOs. She is a business consultant and strategist. And if you missed a call last week, you can listen to it in its entirety at blogtalkradio.com/The Power Is Now. You can also find it on our Facebook website. Listen to that call. I guarantee you will learn something. In fact, last week, the president of our of the LA chapter, Mark Austin, the president of our state chapter, joined us as well, and Anita Jones Cayenne, and we had a great conversation with Shelley about short sales, about working with people in distressed markets. It was just a wonderful conversation, and if you missed out on it, please again go to the website and find that call and listen, and I guarantee you will not be disappointed. Well, today on the telephone is Karla Dennis, enrolled agent. And I had the pleasure of meeting Karla at our speakers forum last month, where she did a fantastic job talking about really the same thing she's going to be talking about today, tax strategies for real estate brokers. Karla is a business and tax strategist. Since 1990, Ms. Dennis has operated her own business in accounting and taxes. As an accomplished speaker and strategist, she has been featured in numerous print media, online media, radio, and TV, such as MSNBC, Smart Money, Yahoo Finance, Consumer Reports, and the Wall Street Journal. Karla's love for providing business and tax knowledge has made her a sought-out keynote speaker and consultant. Ms. Dennis and Cohesive received the prestigious Agents Business Year Award from the City of Cypress. With Karla's passion to educate the youth, she established the Cohesive Foundation to provide financial education and literacy to young people. Karla is highly respected in the tax community and is often utilized by other tax professionals and attorneys as a consultant or expert witness. In addition to her accomplishments as a business strategist, Ms. Dennis holds an undergraduate degree in business with an emphasis in accounting, as well as a master's degree in taxation. She is the author of Against the Odds with Karla Dennis and Tax Storm. Both books are available at Amazon. As a family woman, Karla takes pride in her husband and her 4 sons. Thank you so much, Karla, for joining us today and being on the Power Is Now teleconference.
Eric, thank you for having me. I'm really excited to provide your listeners with some great information.
Well, and that they are going to get today. Folks, I tell you, I wish you could have been with us last month. In fact, every second Friday, the Orange County Association of Real Estate Brokers, we put on a speakers forum. In fact, Bank of America is going to be with us the second Friday in May. That is definitely a speakers forum you don't want to miss if you're interested in doing business with B of A. So Karla was our keynote speaker last month, the second Friday in April, or this month actually. We're still in April. And she did an incredible job talking about the tax strategies that many realtors in that office and realtors simply did not know and understand. And so, Karla, I know that our folks are in for a treat today. and looking forward to this great information. I want to again direct everyone to go to thepowersnow.com, and you will see the presentation that Karla is going to be going through today. And as our previous calls, this is a presentation and a conversation about tax strategies for realtors and brokers. So, Karla, the first thing that comes to mind in looking at your background is that you are an enrolled agent. And I have to tell you that until I met you, I really didn't know what an enrolled agent was. I thought an enrolled agent was someone who just signed up with the IRS to do taxes. I didn't understand that this was an actual designation like a CPA and someone who's gone through a great deal of training. And I may not be the only person that thinks this, but I would have never considered even using an enrolled agent. I would have always gone, like I have been doing for most of my life, going to CPAs. So expand on that for us. You are an enrolled agent.
I am an enrolled agent, and there aren't a lot of enrolled agents out there because the exam that we need to take in order to become an enrolled agent is really a rigorous exam. Our background as EAs are pretty much like CPAs. We've typically gone to school and received our undergrad degree in accounting, but instead of sitting for the Certified Public Accounting exam, which is 90% accounting, 10% tax, we choose to sit for the enrolled agent exam, which is administered by the U.S. Treasury Department, and it's a 2-day rigorous exam that is 100% tax law. So in order to pass that, you have to really understand the tax code from a legal perspective, from everything from individual partnerships, corporations, and really understand the state laws and how it pertains to taxes. So you don't find a lot of us, but I'm really proud to be an enrolled agent. I actually enjoy reading the tax law, and my background is strictly in taxation, is where I've decided to concentrate, and that's where you're able to really help people keep more money in their pocket.
Well, I think we all want to do that, especially commissioned people. We simply pay a lot of money in taxes, and anything we can do to be more strategic about that and reducing our taxes, I think is good for us all. I want to point out also to everyone, especially those who are not able to go to the website and see, but that you are an African American. And how many African American enrolled agents are out there? I mean, is this something that is in many professions, we just don't see a lot of us. Is this another one of those professions where that makes you unique as well, being a woman and African-American enrolled agent?
Extremely unique. I don't know another African-American enrolled agent, and I'm pretty active in the different chapters and the different societies of EAs. It's also a field that you don't find a lot of women in, period, when it comes to tax law and understanding tax code. It's just something that I just kind of enjoy it. I kind of have a knack for it. And I enjoy working with a lot of different people. I work with a lot of CPA firms that do not represent their clients when it comes to tax issues. And I really, Eric, want to make a distinction. A lot of people prepare tax returns. And my firm, Cohesa, we prepare tax returns as well. That's one aspect of taxes. To actually represent a client before the IRS when it's beyond a normal notice that you may receive requires someone that has a very detailed background in the rules of the IRS, the Internal Revenue Manual, and what their compliance and procedures need to be to make sure that I'm understanding when they've crossed the line with a particular client and use that leverage to get what I need on behalf of my client.
Now, why would an individual use you as opposed to just going to a tax attorney?
Most people are going to use me because, number one, I prepare tax returns as opposed to most tax attorneys don't prepare returns. I prepare the actual returns, so I'm very up close and personal with what people are doing on their tax returns. But in addition to that, most tax attorneys spend a lot of time in court. Before you even get to court, there's what we call appeals, conferencing, and hearings, which is where we really shine as enrolled agents. So I'm able to go in and really negotiate on behalf of clients, and I have a pretty good personality and reputation in the districts, which is really important. When you go with an attorney, I kind of feel like you're automatically saying to IRS, I want to go to war, if you go directly with an attorney. If you go, I think, with an EA, you're saying that I'm willing to negotiate with you, and I'm putting someone in front of me that can negotiate for me. We certainly have attorney-client privilege, just like an attorney does. But I don't recommend that anyone gets an attorney unless there's some criminal aspects involved in the case, because it automatically puts IRS on edge when you bring an attorney into the picture.
Wow, what a great point. I never would have thought about that, that the IRS would get defensive or on edge when you are being represented by an attorney, and especially if it's not a criminal matter. That's interesting. So
exactly.
I think most people just default to think, well, I need a tax attorney because, I don't agree with this. It's not happening my way. Whereas you, the perception they have of you is as a negotiator and a person who also knows the law like the attorneys.
Exactly. And the IRS chooses to work with enrolled agents because they know that we have to understand what they already know. So they're not having to train us, and they know that we're not coming in filing a lawsuit against IRS. So we're really coming in wanting to negotiate and get a reasonable settlement for our clients. And, of course, we are going to take into consideration the tax law because we certainly know it. But our ultimate goal is to keep our clients out of tax court, to get them a settlement, and to make sure that we know enough about the law to ensure that we're going to get the best settlement we can for our clients.
Wow, that really sounds great. I have a CPA. In fact, he has been a guest on this show at least 4 or 5 times. His name is John Gonzalez, great guy. How do you work with CPAs? Because the emphasis between, as you have so articulated, is a difference in understanding tax law versus not understanding tax law. Well, I don't think you're saying that CPAs don't understand tax law, but that's your emphasis as an enrolled agent, right?
Right, that is my emphasis. CPAs mostly do a lot of tax compliance. Compliance work means that they're preparing tax returns and they're filling out the forms, and they have really good backgrounds as it pertains to that. An enrolled agent takes it a step further. Not only do we know tax compliance, but I can look at a tax return and instantly tell whether or not that tax return is going to trigger an audit. Just because I represent so many clients in audits and so many clients with tax issues, I know the hot buttons, and I'm going to advise my client not to take a certain deduction or not to name a certain deduction with a particular heading because I know that language is going to trigger an audit.
So most people then who are engaging your services, are they looking for just regular accounting services, or are they typically in some type of tax trouble, or they need some help negotiating, maybe offering compromises or a revision of their tax returns?
Right. Most people that are engaged in our services, if we are being engaged by a CPA, and the way that I work directly with the CPA is that I'm going to help a CPA in an audit with their client. I will do the representation for them. I will also review any positions on a tax return where the CPA may not feel 100% comfortable with that position they're taking, and they want me to vet out the law and what the recent case laws are in that particular area. I provide that type of knowledge. And I also deal with clients that are more sophisticated in terms of owning their own businesses. They're self-employed. They're looking for every strategic tax move that they can make to lower their taxes. that's typically a client that's going to come to me. And also it's going to be individuals who are possibly in an audit or have a tax problem, and they want to make sure that they are getting the best resolve possible.
Okay. Well, so you are a natural partner for a CPA who really doesn't, they don't really want to do that, do they?
Most CPAs don't want to represent their own clients. They'll respond to letters and notices, and some of them will do very cursory audits. But when it really gets down to field audits where IRS wants to come out and make a house visit, or it really gets into negotiating real distinct issues, that's where they will usually contact me to take over for them, and they hire me as a consultant. I do the work for them. They retain their client, and I just really enjoy what I do. I'm really passionate about that.
Well, you've been doing it since 1990, and you are a bona fide expert. I'm really impressed with the speaking and the consulting you've been doing. I mean, you've been on television, MSNBC, Smart Money, Yahoo Finance, Consumer Report, and the Wall Street Journal. You know, that's my dream one day, to be quoted in the Wall Street Journal. I don't know what I'm going to say, but, you know, Eric Frazier from The Power Is Now says.
Exactly.
But I'm really impressed with your credentials, and, you know, having a strategy, being able to deal with the IRS when they're knocking on your door or sending you letters, that's so important, and that's what this call is all about: strategic tax planning for realtors and brokers. And perhaps today more than ever, is there a need for us to be more strategic in our planning, because the IRS are out there in force, are they not? And in fact, that's our first bullet, folks, in our flyer. The IRS is on a mission. More audits are being done, and target groups and realtors and brokers are just, we are the target for the IRS.
That's exactly correct, Eric. And IRS is on a mission. In 2010, IRS hired 17,100 new agents just for audits. They really realized, with the government being in a deficit budget situation, the fact that the real estate market kind of imploded, if you will, mortgages imploded, IRS realized more than ever that they needed to really do something strategically to generate more revenue for the government. And one way that they do that is in audits. The biggest revenue generator for our federal government is the collection of tax. And audits generate a tremendous amount of additional revenue for the government. I was reading just yesterday where IRS gave some statistics on the amount of money that they were able to generate in audits of real estate agents in 2010. The audits that they conducted in 2010, which included auditing 2007 tax returns and auditing 2006 and 2008 returns, IRS was able to collect an additional $1.2 billion. $1.2 billion in additional revenue for the government.
That's incredible.
Incredible.
1.2 billion, not million, but billion.
Billion, $1.2 billion. And so IRS, with that note, IRS has stated just this week that they are going to further increase the amount of the agents. Their plan for 2011 is to hire 5,100 additional auditors strictly to audit real estate agents, real estate brokers, and individuals who own real estate.
You know, Karla, I'm so glad. You know, this teleconference, folks, is being recorded, and I'm so glad it is, because I know there's somebody on this call that knows an agent or a broker, or maybe they're not even an agent or a broker. They're just a businessman, an investor who's dealing with the IRS right now, and we need to all know this. This is serious. This is an actual attack, really, on the real estate profession.
It is. It's an absolute attack, and IRS is launching a full-blown attack on anyone who has anything to do with the real estate industry. It's not only going to affect a real estate agent or a broker, but it's going to affect individuals such as myself that owns real estate. We are all going to be subject to an audit. And, Eric, to take it a step further, what happens is, as an individual, and you own real estate and you are now subject to an audit, what ends up happening is they not only audit my real estate, but then they start to audit my other companies that I am involved in.
Wow. It just once they open the door, they just walk all the way in, right?
They
and they're
walk
checking
all the way in with luggage, and they pack their lunch, and they're really coming to stay.
Oh my goodness. Wow. So give me those numbers one more time. 2011, they've already stated they're going to hire 5,100 more agents. And what did they hire in 2010?
In 2010, they hired 17,100.
17,100.
17,100.
And what about in 2009?
In 2009, they started ramping up their hiring. And in 2009, I believe they hired over 5,100 in 2009. They started slowly. Okay. But in 2010 is when they really decided to really go for it.
So that's 27,200 more auditors on the street, boots on the ground, and going after the real estate agents, brokers, investors. And you know what? It makes sense. If you can audit just 3 years of taxes and come up with an extra $1.2 billion, that's like that's like the equivalent of us going through, our clothes and finding money, right?
Exactly. And IRS is getting smarter. They're auditing strategically, meaning they're going after the marketplace for them, the clients for them that they know that possibly have the biggest risk. And self-employed individuals, real estate market has been the biggest talk of the town in terms of our economy. So IRS has turned their efforts toward that same area and have decided to focus on generating additional revenue from that particular marketplace.
Wow. Well, we are, we're trying to eliminate or significantly reduce a deficit, $1 trillion deficit. And it wouldn't surprise me, too, if various states also increase their auditing activities, because just about every state in the union is having some type of budget balancing problem, especially here in California.
That's very correct, and I will tell you for certain the state of New York and the state of California are talking about it. Years ago, the states would do a lot more audits. Then the states stopped doing audits, and they allowed the IRS to conduct the audits, and then that information was reported to the states, and the states would issue out notices of proposed assessments to taxpayers based on IRS findings. But now there's talk that the states are going to start doing their individuals' audits themselves again.
Wow. Well, the foundation of all these audits is coming from new laws, just a whole new approach the IRS has, a new IRS essentially. And let's dive into your presentation. Kind of just share with the audience what you shared with us, a few weeks ago. On the new laws, the IRS and the new compliance, all the new penalties. It's just a lot happening with the IRS, and we need to be aware of it.
There's absolutely a lot happening with the IRS, and one of the things that we need to really remember is that any time we're hearing about any new laws passing, whether it's Wall Street regulation, bank reform, homeowner bailout, first-time home buyer credit, anytime we hear any new laws passing, anytime the government is giving us something, they have to come up with a way to pay for it. And the pay for it is the fact that they're going to be increasing taxes in some way, shape, or form. I know a lot of your listeners may have heard recently conversations coming out of Washington and the administration where they're going to be increasing taxes on individuals that are making over $250,000 a year. What wasn't stated in that conversation is that not only will our tax bracket increase, but for individuals that are not making $250,000 a year, there are certain tax deductions that are on the books right now that are going to be eliminated, forcing everyone to have a substantial tax increase. And I've done some preliminary calculations, and based on what they're talking about, the average individual is going to see between a 13% and a 17% tax increase regardless of your income level. So don't be fooled by the languaging stating that taxes are going to increase for people making over $250,000. They're also going to increase for people making below $250,000 as a result of certain deductions being eliminated.
Well, that's pretty scary. We already pay a lot in taxes.
We pay a tremendous amount in taxes. And this is why making sure that you as a taxpayer are strategically planning to reduce your tax bill, because IRS is strategically planning to increase your taxes. And some of the things that you need to look out for are the fact that when IRS is auditing you now, they have new compliance rules. And some of those new compliance rules we probably aren't aware of, and I want to share a few of them with your listeners.
Sure.
Because I want them to know. And one of the biggest areas are that when we as business owners go out and we're entertaining potential clients, we're going out and we're having a meal with them, and we're charging that to our credit cards, no longer is just having the charge card itself, the American Express bill or the Visa MasterCard bill, enough in order to allow that deduction. You now have to have the receipt to go with that charge, the actual receipt from the restaurant, or if you are purchasing anything that you want to be deducted and you're writing a check or you're paying online or using your credit card, you have to also now keep up with those invoices and indicate on those invoices and on those receipts why these items were business related. You now need to note that. So on audit, you need to present the credit card slip, the actual bill which you have from your credit card company, and the actual invoice or receipt that you received from the merchant that you did business with. Not having these things is going to get your deduction disallowed, and IRS is now going to automatically impose their accuracy-related penalty, which is a 20% penalty for underpayment of tax.
20%?
20% accuracy-related penalty will automatically be imposed.
So how's that 20% calculated? So they compute where your tax actually is and add another 20% on top of that?
Just for the penalty.
Just for the penalty.
And then there's going to be interest.
Now, are these penalties compounding? So that's one. So you underestimated your tax, and then they find something else. Is there another penalty for that?
Absolutely.
Really?
Absolutely. These penalties are compounding, and now we have interest on top of penalties on top of tax. So now we've taken a simple, say, for example, $1,000 underpayment of tax bill, and we've turned that into maybe a $1,200 bill or a $1,300 bill. And as penalties and interest continue to rise, we've now maybe gotten up to a 50% additional assessment above and beyond the tax liability. Eric, IRS is expecting to collect $69 billion in penalties over the next 5 years for taxpayers not understanding the law and not being in compliance.
Well, you know, they say that ignorance is not an excuse under the law, right?
Right.
So we can't claim that we don't know, or we didn't know, and because we didn't know, they're not going to penalize us. They're going to penalize us. We've got to know what it is that they want, how they want it. The other great saying is that hope is not a strategy, right? We can't hope that we're not going to get audited. In fact, is there a way to protect yourself from an audit? Can you do your taxes in a way where you just almost guarantee you're not going to get audited?
You can't guarantee that you're not going to get audited, but you certainly can take some very appropriate safeguards. And one of the biggest safeguards is making sure that the person that signs your tax return doesn't have IRS issues. Right now, IRS has launched another program where they're going after preparers that are unlicensed or pretending to be licensed. That's why it's so important that you work with individuals that have appropriate credentials, because just by the name of the person that signs your return will determine whether or not IRS will automatically pick your return up for an audit.
So you're saying that a bookkeeper or a tax professional or a CPA or even maybe another enrolled agent, if they have a tax issue themselves, by doing your taxes, you will somehow, fall under the radar, not but on the radar, really.
Absolutely. Absolutely. As an enrolled agent, I have to file my tax return on time. If I am being audited, I have to disclose that to my clients. And if I have major adjustments on my own personal return, IRS is going to assume that if I'm not doing a good job for myself, then I'm certainly not doing a good job for my clients. Absolutely. You want to make sure that the person you're dealing with is keeping impeccable records themselves and are always operating above board and in integrity. And I tell clients a lot of times that I can't prepare your tax return because what you're asking me to do is out of integrity, and I have to not only protect myself, I have to protect my clients. Just this past April 18th, IRS shut down a major tax office in Orange County, and I'm going to say major tax office, very well-known tax office in Orange County, because that office is under investigation for doing things on the tax returns for clients to help them get back more money. And they audited a few of the returns out of the office. The returns had adjustments, so they seized the entire office on April 18th.
In Orange County?
In Orange County.
Wow. This is serious, folks. This is serious business. IRS is simply not playing around. And if they're going after the tax professionals as well as those of us who are trying to pay taxes and do it right, then no one really is escaping the government's quest to just maximize revenue. And the very fact that over the next 5 years, you're saying they're planning to collect $69 billion, that's a lot of money that you're going to be extracting from the taxpayers.
It is absolutely a lot of money, and what taxpayers need to know is that certainly the person that signs your return is important, but even above and beyond that, I want everyone to know that there is publication number 1, Taxpayer Bill of Rights, and what's really important about that is if you are audited, you have the right to representation. Never represent yourself in an audit, and I tell people this over and over again. Many times people will come to me after they've attempted to represent themselves in an audit and they'll say to me, Karla, the revenue agent was so nice to me in the beginning. Well, of course they're nice to you because they're trained to extrapolate information from you in a very non-threatening manner so that they can get the information that they need in order to further pursue audit with you. And those very initial conversations with IRS sets up the foundation for where they're going to go with an audit. Eric, I had here's a real good example. I had a client that I was representing in an audit, and the client came to me only after there were 3 conversations that the particular client had had with the IRS. And what the IRS agent did is that the IRS agent called the office of the particular realtor. They called the broker's office, and it was the broker that was being audited. The IRS called the office and started to ask questions of the receptionist that answered the telephone. And the receptionist unknowingly, of course, is trying to help out her, owner.
Right.
Trying to provide information as not to bother the owner, but the receptionist divulged information at the very ground level of the audit. And then once the owner gets on the phone, the IRS immediately starts to ask the owner questions. The owner is caught off guard. They don't know that they have the right to remain silent. They're caught off guard, and they start to talk. It's almost like they feel like they're in confession, where they need to just tell the IRS everything.
Wow.
By the time that I got the audit, the IRS had about 4 or 5 pages of detailed notes that I had to get a hold of and begin to refute what was already being stated. So knowing that you can get representation, knowing that you don't have to talk to the IRS, knowing that you can remain silent and not respond to their questions is very powerful knowledge that I certainly want your listeners to take away from the call.
Wow, that's a great example of, number one, a broker needs to make sure his employees, receptionists, assistants, what have you, never speak to an official from the IRS or from the Department of Real Estate or anyone for that matter without, referring them to them directly. That's number one.
Exactly.
And so, strategy. You mentioned earlier about them just being more detailed in regard to verifying our expenses, taking people out to lunch and that kinds of things. What can we do to do a better job at that? What is the strategy from a bookkeeping, organizational, or just our approach to expenses? What should we be doing differently than perhaps many of us are doing now?
Absolutely. Well, first, I think that everyone should be on an accounting system. Track your records. Most people I'm seeing don't do a very good job on the onset of just really tracking their expenses. They're going to always remember. They're going to remember where that receipt was, but they fail to do so because most business people are extremely busy. So they're not able to track everything. So tracking your expenses and getting yourself onto an accounting system is really a priceless recommendation. That's the first thing that I would recommend everyone do. But when it comes to your taxes should be really strategically planned starting May 1st of every single year. You need to start strategically planning your taxes. When we as business owners, everything that we do in our business, we're planning to do it. We plan on generating new revenue by new clients. Real estate agents are planning on selling more property. They put together a plan for that. You also want to put together a plan to strategically lower your taxes. From January through April, that is strictly tax compliance time, Eric. That is where most tax professionals are just taking your information, getting it into the appropriate forms, and doing the compliance that is required for taxpayers to submit their returns to the IRS. From May through December, every individual needs to put together a tax plan to reduce their tax bill strategically. And when one does that, they will find out that they can lower their taxes. And I really want to give you some examples of how significant that can be and also how you can go about doing that.
Okay, great.
To think about it, GE, General Electric, did not pay any taxes at all in 2010.
That was big news yesterday, wasn't it? I couldn't believe it.
It was huge.
$14 billion. That's the number I heard that they
exactly
that they made in revenue and didn't pay a dime in taxes.
Didn't
wow.
pay a dime in taxes. $14 billion in revenue, not a dime in taxes. And the reason why they didn't do that is because GE strategically, on purpose, did not pay taxes. They got a team of people to put a strategy in place to make sure that they didn't pay taxes, and they did it legally using the tax code.
Wow.
And you, myself, and your listeners, none of us are any different from GE. The numbers may be different, but the tax code is exactly the same. All of us need to put together a strategy to reduce our taxes. And the way that we do that is the first thing that we have to do is we need to really understand where we've been in terms of our taxes. You really need to get out a couple of years of your tax returns, really review those tax returns, and if you don't know how to really read them, get with someone that does. Review where you've been. I mean, I always equate everything to sports because I'm a big sports person, especially having 4 boys that play sports, and I follow the Lakers here, and hopefully they're going to win. Let's hope, right?
Let's hope, right.
Yeah. So they're always going to review what they've done in the past.
Right.
What did we do? What did we do good against this opponent? What did we do bad against this opponent? Where do we need to shore up and improve? So in terms of putting together a tax strategy, you have to look at where you've been, see what you've done in the past, see the mistakes or areas that need improvement and things that you didn't take advantage of. Once you do that, the next step would be to assess where you are currently. Many self-employed individuals will say to me, well, Karla, I cannot estimate what my income is going to be because it depends on how many properties I may close, how many new clients I may get. Okay, maybe we don't have a definitive number, but we can come up with a pretty good estimate based on what we may have in escrow or based on what we're targeting.
Right.
But come up with a definitive number on what you think your income is going to be. Then from there, we need to project where we think your taxes are going to be. Once we know exactly where we are, what we're working with, what our income streams are, what other low-hanging fruit that we can work with, now we can put together a strategy to reduce our tax bill. A real good case in point is I had a client that came to me. They owned some real estate, quite a bit of real estate. They were making, a pretty decent income, and they were not taking advantage of one simple area of the tax code, and that is becoming a real estate professional where you can flow your real estate losses against any other income on your tax return. Most people aren't aware of that. I see a lot of individuals that own real estate not being able to deduct that depreciation against their other income because they aren't aware of a strategy to put in place to do that. With this particular client, Eric, their tax bill was $48,000. I looked at their situation. I was able to get them a strategy in place by having one spouse become a real estate professional. They were able to flow their losses against their other earned income, and their tax bill was dropped down to $10,000.
Wow.
That's $38,000 that they were able to save. So whether you're saving $38,000, whether you're saving $5,000 or $3,800, it's still your money that you can utilize to do something else with.
But how did she become a real estate professional? I mean, you can get a license, right? And, but do you have to sell something, right, or do you not?
You don't have to have a real estate license to be a real estate professional.
Okay.
And that's where a lot of individuals really get this area of the law confused. Being a professional realtor is different from being a real estate professional. A real estate professional is someone who owns real estate and materially participates in that real estate. So a good example would be someone that owns a couple of rental properties. Maybe they're managing one or two of them. They're collecting their rents. They are making sure that repairs are done. They're calling out the handyman people to get those repairs done for them. They're actively participating in their real estate. And this is what they're doing on a full-time basis. Many times I will be able to even look at someone's tax return, husband and spouse, where one spouse's income is not as substantial as the other, and what they're paying in taxes is just about the other spouse's income. Qualifying them as a real estate professional, I can literally get one spouse staying at home, and the overall household is making more money than they were if both spouses were out working.
Well,
it's really about strategically planning to reduce your taxes. And that's just one example. I have tons and tons of examples, but using real estate is just one of them.
mm-hmm. You know, as a real estate professional, we get ourselves in big trouble providing any type of legal or tax advice. Just in the two things you've stated so far, I think actually the first thing, instead of complaining about GE and not paying any taxes, we need to be like GE and have a team, don't we? We need a team.
Exactly. We need to become GE. That's exactly it. What I like to say, find somebody that's doing what you want to do.
Right.
And become like them.
Right.
And GE did what they did legally. I'm proud of GE. They did what they did legally, and good for them.
Wow. So the very first step then is to, review your taxes over the last few years. But, I know I'm not a tax expert. I would rely on my CPA or someone who's a tax professional to review it with me to tell me, what I could do differently or how I can reduce my taxes. And so I think, isn't that one of the challenges, though, that people are trying to do this on their own? They get out the old, what's that TurboTax program, and they try to figure it out.
Exactly. A lot of people will use TurboTax, and TurboTax does a very good basic job.
Mm-hmm.
A basic job is what TurboTax is going to do for you. But we are professional individuals. We are very strategic in what we do in every other aspect of our lives. We really do need to get strategic about the biggest bill that we have. Next to our mortgages and our rent, our taxes is our next biggest bill.
You're right.
It really is, whether we're paying income tax, self-employment tax, Medicare tax, we are paying a substantial amount of money in taxes. And really, our net worth and the amount of income we make is going to be challenged by taxes, and we really need to get proactive with it. And one other thing that I do want to say is that if your accountant, your tax professional, is not talking to you about being proactive, and they're not talking to you about the latest and greatest laws and cutting-edge things that you can do to reduce your tax bill, then you really need to reevaluate that type of relationship. Because I want any professional that I'm dealing with, I want them educating me on what's the latest and greatest stuff that I can use. I think about my practice, and I think about technology in my practice.
Mm-hmm.
And I'm always looking for my IT person to tell me what's the next thing that I need to be planning for so that I can continue to move my business forward.
Right.
So it's the same thing with your taxes. What's coming down the line with the talk that's going on in Washington right now,
right,
with these tax changes that are going to affect you? I certainly would want to know what's going to happen and give myself 6 months, a year, 2 years to plan. I mean, if we had known the real estate market was going to do what it did, and we had that knowledge a year or 2 years in advance, everybody would have been making some strategic moves.
This is true.
So knowledge is power. You want to make sure that you're being empowered with knowledge to move you forward so that you're not caught by surprise. You don't want to hear about new tax laws when you're sitting down getting your taxes prepared.
Doesn't make sense, does it? But that's the case, though, with most people.
It's the truth. That's the case. And so I just really, I spend a lot of my time early in the morning, and I get up and I, get on the Wall Street, CNN, and I want to find out what is everybody talking about. What's the latest talk in Washington? What are these committees talking about in terms of new laws, what's on the horizons.
Right.
And before these laws pass, I want to be aware of them so that I can pass that knowledge to my clients and get them prepared. Let's make some strategic moves now, because if this happens, you're going to be impacted.
Now, we're coming up to 11:30, and I tell you, Karla, I could talk to you for another hour, but I do want to talk to you for at least another 15, 20 minutes, give people an opportunity to ask questions. And for those of you who are on Blog Talk Radio, all you have to do is press 1, and my co-host will get on the line and get your question and make sure I'm aware of your question and know who you are so we can introduce you properly when you ask your question to Karla. And operator, just give instructions for the rest of our listeners on the other line.
Absolutely. Ladies and gentlemen, if you are not participating via Blog Talk, please press star and then 1 to join the question queue.
So, Karla, tell us about the new laws. I mean, in your PowerPoint, you list about, 10 different laws that are going on. Give us kind of a high-level overview on the good and the bad and the ugly.
Absolutely. Absolutely. The biggest law changes that we saw happened actually December 27th, where they signed into law the extension of the Bush tax cuts, which basically allows for the continuous utilization of the educational credits, the energy credits. Those were the laws that were extended. Our not getting so substantially hit with alternative minimum tax. They put another patch in place so that many people wouldn't fall into that category. They also extended the depreciation for equipment, a maximum of $250,000. That was the good things that were extended. But what they also did with the health care bill, there are some laws that are coming into place with the health care bill, which means that here shortly, in about 2 years, starting in the end of 2012, 2013, they're going to start hitting our passive income with self-employment tax. There's some additional talk about taking away the mortgage interest deduction. That's just talk right now, but that's something that we really need to keep our eyes and ears to the ground in regards to that. These laws only extended through the end of 2011. When the sun sets on December 31, 2011, we're going to automatically see an increase. Depending on what your income level is going to be, you will not even be able to take the deductions for your own children if your income is over a certain amount. You will also lose the ability to write off their college expenses on your tax returns. You will no longer be able to get the working pay credit that is out there, the energy credits that are out there for doing repairs to your rental property and putting in new windows and new doors and things of that nature. Those are going to be going away. So there's a lot going on in terms of taxes and changes, and just a substantial amount. I just highly recommend that everyone vet their taxes against these new laws that are going to be eliminated and see what their tax bill is going to look like.
Speak to us about short sales and REOs. I know that there were some provisions that allowed for or delayed or deferred or eliminated the taxation from the release of debt in California. I don't know if that's still going on, and what does the future look like? Were there limitations on those laws?
That is still going on. What you're speaking of is that through the end of 2012, December 31, 2012, where it stands right now, because they can always come in and eliminate a law. But if you foreclose on a primary residence, you will not have to be concerned about the debt relief. But that's strictly on a primary residence. If you foreclose or short sale on investment property, you will be hit with that additional debt relief from the lender not being fully covered on the sale of that property and the mortgage that is owed on that particular property.
Wow. And that's both federal and state?
Absolutely. That's both federal and state. But the one thing that we need to really understand that there are some strategies that anyone who owns rental real estate and they end up in a foreclosure or in a short sale position that they can possibly take advantage of to alleviate them from having to report that additional debt relief income. And, Eric, that debt relief income is really incredible. It's where the bank takes your home back or you foreclose.
Mm-hmm.
And whatever the bank is able to sell the property at after the foreclosure or whatever that fair market value is on the date of foreclosure, that is considered the amount of money that the bank has received. So if you owned a piece of property, for example, that you had a loan on for $260,000, and the bank was able to take that property back, and that fair market value was $190,000, and you owe $260,000, you now are going to receive a 1099-C for cancellation of debt in the amount of $70,000. And that debt is considered ordinary income to you in the year that you foreclosed on that property.
Ordinary income, and because it's an investment property. This is not primary, right? Not primary.
This is not primary.
Right.
This is investment property. That's going to be ordinary income to taxpayers. But possibly these taxpayers may strategically not have to consider that income as taxable. It may be reportable, but it may not be taxable if they, in essence, can declare themselves insolvent for tax purposes, or if we may strategically look at doing a bankruptcy, or if possibly the sale of the actual property on the tax return for the individual has a loss that will wipe out that additional income.
Okay. Well, so there's several counterattacks, if you will, or counter strategies to deal with this. If you do find yourself in that situation, and there are quite a few investors out there who are either walking away or can't sell or having to short sell investment properties, and we're just beginning to see perhaps a whole lot more of that over the next few years.
Oh, absolutely. There are several counterattacks, and many people are running afraid. I know that we got an influx of clients at the last minute who had short sold or foreclosed on property, and they just didn't want to bring themselves to have to deal with their taxes. But once they sat down with us, they realized it wasn't as bad as they thought it was going to be, and in some cases it worked in their favor. So for any of your listeners that have that issue, really deal with the issue now rather than later, because it may not be as bad as you think it is, and there are certainly strategies to put in place to reduce that tax burden.
Well, that's really good news that there is strategy. So one particular strategy that you mentioned is bankruptcy. Does bankruptcy in and of itself eliminate the tax liability?
Bankruptcy can eliminate tax liabilities depending on what type of bankruptcy and depending on how old the taxes are. So if you have an individual who is going to go, for example, into a Chapter 7 bankruptcy, which is a full liquidation, they have to have taxes that have been assessed for more than 3 years in order to eliminate their tax bill in that particular situation. However, you may have someone that is going into a reorganization. They may go into a Chapter 13, for example, or a Chapter 11, where they are reorganizing their debts, and they're able to cram down the taxes during that particular bankruptcy proceeding. You can use bankruptcy as a strategy, and I know a lot of people feel as though bankruptcy doesn't really set well with them personally. There's certainly an emotional decision when they're thinking about bankruptcy, but My philosophy is bankruptcy is a law. It's an option out there, and we need to strategically use it when it's a way that we have to protect our assets and get ourselves back in a viable, income-producing situation and even a better state of mind. When you have a lot of debts and you have a lot of moving parts and a lot of stress with taxes and properties going into foreclosure and potential of losing properties, we really got to think strategically and not emotionally.
Sure.
And we have to make a business decision. We really do. And so bankruptcy is certainly an option for individuals that are out there, and really getting with, this is the key, you have to get with someone that understands the bankruptcy laws as it pertains to tax implications. And if you're dealing with real estate, they need to understand the bankruptcy laws as it pertains to real estate that is rental real estate.
Okay.
That's really key. Not every bankruptcy attorney is going to understand that. It needs to be their specialty.
Wow. This is a lot of information. Operator, do we have any questions?
Yes, I do show a question in queue from Jamie. Jamie,
Okay.
your line is open.
All right. Hey, Jamie.
Hey, Eric. Always fun to listen to this conference. And I have a question. Let's say a client owe $500,000 and property value is $200,000, but they owe first trustee $300,000 and second is $200,000, and house foreclosed at auction sale was $200,000. But in California, it's not a judicial state, so $300,000 is going to be wiped out. But the second can follow for the people they want to get some more money. So how do they file taxes in that case for the second?
Okay, so if you are in a situation where the second can potentially come after you.
Right, because that's, they foreclosed the home and they have a right to sue the client for deficiency.
Right. Mm-hmm. So we can handle that one or two ways. If the second you still owe the second money, and the second has not canceled the debt yet, then there is nothing to do on the tax return until that debt is canceled on the second.
Okay.
You could handle it that way, or you can choose to go ahead and report the debt relief on the second to deal with the entire sale in the year that it happened. And if you indeed end up paying the second back, you can always go back and amend the return. Now, there's a strategy as to why you may want to report that loss, that additional income that particular year versus waiting. And the reason why I say that is because if you are going to report the sale of your property, your investment property, if it was
this is a principal resident.
Okay, if it's a principal residence, you don't have to be concerned about it at all.
At all, even though, in California, second can sue the principal and collecting the debt.
Right,
so,
the second can sue and collect the debt, but in terms of taxes, you don't have anything to be concerned about.
Oh, I see. Okay, got you. All right. Yeah, that is my question. Okay. All righty. So tax they don't have to pay, but second going to keep calling them to give me my money back.
Negotiate,
right. Thank you. Got you.
And that's what you do. You negotiate with the IRS.
That's correct.
In case, they want to make an issue out of it.
That's correct.
Well, thank you, Jamie, for the question. Operator, do we have another question?
No, I have no other questions in queue at this time.
Okay, we do have a question on Blog Talk Radio, and let's see if we can bring this person online. Let's see here. Okay, caller, are you there?
I am.
Okay, what is your name? Oh, is this Erica? This is my co-host. All right. So we have a caller on the line. Can you identify yourself, sir?
My name is Ken.
Okay. Ken, what is your question?
I had a question regarding corporate entities, as far as a C corporation or an S corporation. If you basically file a C corporation, an S corporation, how is the owner entitled to get money out of that corporation, paying themselves?
If you have an S corporation, the way that an owner is going to get money out of that corporation is going to be one of three ways. You should always, as a corporate owner, be on payroll and receive wages. The second way that you're going to get money out of that corporation is via distributions, where you're going to take money out of the corporation, and it's going to be called a distribution. Or you can also pay yourself dividends on your stock. So those are your three options. You can do all three, or you can do any combination of the three, but you always have to pay yourself a wage out of your S corporation if you are indeed working in the S corp and you're not just a silent shareholder.
Okay.
Did that answer your question?
No, I also read that with an S corp, the taxes flow through directly to the owner. So you pay yourself taxes throughout the month when you pay yourself a salary, but at the end of the year, how do you work that out?
Okay, when you pay yourself a salary, you have to pay your employer taxes, your federal, state withholding, your Social Security, your Medicare. You have to pay that ongoing as you pay yourself. So that's a payroll issue. But anytime you take money out of your S corporation, you're considered to be a self-employed individual, and you need to make estimated tax payments quarterly. Those quarterly estimated tax payments are due April 15th, June 15th, September 15th, and January 15th of the subsequent year.
Okay. That answers my question.
Very good.
Thank you.
Well, that's a whole nother discussion, isn't it? Dealing with entities, sub-S, C corps, sole proprietorships. All of them have their strengths and weaknesses, don't they?
They do. Each entity has its own strengths and weaknesses, and depending on what type of tax strategy you are employing will determine whether you should operate in a subchapter S or C corp or a partnership and so forth.
Well, thank you for your question, Kent.
You're welcome.
Operator, do we have any other questions?
No, at this time I have no other questions in queue. Once again, if you do want to ask a question by phone, please press star, then 1.
And if you're on Blog Talk Radio, just press 1. Karla, while we're waiting for just a few more questions, and we're way past time, I really appreciate you spending time with us today. I know you are extremely busy, especially with all the TV appearances. So thank you for being with us. Tell us about how we can get in contact with you, and how do you work with clients?
Absolutely. My firm, Cohesive, can be found on the web at cohesivetax.com. And listeners can also call my office directly at 1-800-878-4051. We are a national firm. By me being an enrolled agent and everyone in my office that are tax professionals are enrolled agents, we're automatically licensed in all 50 states. So we have clients in New York all the way to Hawaii, California, if you will. We work with clients via Skype, conference calling, in-office appearances, whatever it is that they need us to do. But basically, what we really like to do with clients, we really like to work with clients and get them started on tax strategy. Whether they are in IRS trouble or not, or they're just an individual wage earner, a business owner, it doesn't matter. We start off by getting to know the individual, who they are, and what's important to them. And that's really key. We want to know you. And the reason why that's important is because when I'm putting together tax strategies for people, I want that tax strategy to encompass what it is that they're trying to do as a whole person, regardless of just looking at their taxes. And I want to give you an example of that. I have 4 sons, and leaving a legacy to my 4 children is extremely important to me. So part of my personal tax strategy encompasses having my children in certain aspects of my businesses that I own, getting them educated to take over these businesses and getting them involved in the real estate that we own. Our strategy encompasses all of that. So as an individual, I want to know, what are you up to? Because I want your strategy to encompass the things that you really want to do. Once we figure that out, then we put a strategy in place to lower your taxes and doing what you are choosing to do and what you're passionate about. Some people want to go into the nonprofit world and start diving into that. We create nonprofits around their for-profits. Some people want to own real estate. Some people want to volunteer to do different things. It's really incredible. And knowing the whole person, I'm able to put a strategy in place that can kind of give them what they want, lower their taxes, and keep more money in their overall household.
Well, that's great. You really are taking a very comprehensive approach to their tax situation.
Oh, exactly. It really has to be that way. Most people think it's only about their W-2 wages or only about the money that they earn. It's totally about so much more than that. We can use our children to help us lower taxes more than just using them as a write-off on the tax return. I mean, we can create entities for our children. We can get them in a business. Part of their benefits could be the payment of their entire college, get that tax deductible. There's so much that you can do. I mean, if you think in terms of a major corporation, and you go to work for a major corporation, and that corporation can provide you with, for example, a company car. When I used to work in corporate America, I used to have a company car. I had an expense account. Those are the same types of things that we can do at a lower level to reduce our tax bill, get a lot of stuff written off using the code.
Really?
And do it legally. Absolutely.
Now, we have Deanna from People's Choice Brokers on the line. Deanna, are you there?
I am. Can you hear me?
I can hear you just fine. Thank you for being on the Powers Now today.
Oh, thank you. I've enjoyed the topic, so thanks to both of you guys. Karla, I do have a question for you, and I have to tell you, I've been in a struggle with IRS for the last 2 years, and in all of the years that I've paid taxes and worked, I've never had a problem. And I have to tell you, finding someone like you has been like trying to find a needle in a haystack. So I didn't know what I was looking for initially, but I know you just gave us your information, so thank you for that. But how would someone go about finding you? I've asked CPAs, I've asked tax services year after year, what can we do to reduce it? Nothing. You can't do anything. You just have to pay. And, then I go to the next person. And it's so hard. Are there some key ways or, organizations that would lead someone to like a cohesive tax that looks at the whole situation?
Diana, that's a very good question. Everybody sets their tax practice up very differently. My approach comes really from my knowledge of being out in corporate America, seeing what's going on with taxpayers, and really being in the trenches myself as a business owner, as an investor with a family. And so as I sit back and think about what it is that I would want, I've created my company around the whole person. So I guess the best answer to that question is I look for people that are a lot like myself. What is it that I'm looking for? And I ask them questions. I interview people that I'm going to do business with. And you just keep going and going until you find an individual, because it is kind of rare that someone is going to do that. And people often ask me, why did I name my company Cohesive? And that's really the reason. It's because it is a cohesive approach to dealing with your taxes, your finances, and making sure that you have very strong money rules and that you're being educated on how to reduce your tax bill. I wish there were more Karlas out there doing what it is that I do, because I hate when taxpayers come to me and I see the prior situations that they've been in, and it's just kind of gut-wrenching.
Now, Karla, do you really wish there were more of you out there? Can't you just expand your practice? I mean, you're doing business in all 50 states. Come on now.
Right, I do business in all 50 states, but I wish more tax people would take a more comprehensive approach, because I'm real passionate about reducing people's taxes, and we work really hard. Certainly, I couldn't service everybody in the United States.
Sure.
But I wish that more people would take that type of approach.
No,
I really do.
Yeah. Well, Deanna, did she answer your question?
Absolutely. And I think that the key thing that you mentioned earlier is that start early.
Yes.
You can't start in March looking for a person like you or a service like you to take the time to interview. So thank you. This has been so informative.
Thank you. I appreciate it.
Well, thank you for being on The Power Is Now, and please tell your friends every week, same time, same place, The Power Is Now. So, Karla, we are completely out of time. I've got 8 minutes left before Blog Talk Radio is going to kick me off the air. So I'm going to move right into announcements, and I want you to hang in there with us through the end here. I want to have a few words with you at the conclusion of the show. Ladies and gentlemen, this is another wrap of the Power Is Now teleconference, but don't go anywhere just yet. I want to share some very important announcements with you. First of all, please, if you can get down to L.A., go to the Consolidated Board of Realtors, Realtist in Los Angeles, putting on Realtist Week. And today at 3 o'clock, Milton Shaw, Senior Vice President of Lenders Processing Procession Services, is going to be moderating an REO broker forum. It's from 3 to 6 p.m. The cost is $15. I want to encourage you to go down there and find out what does it take to be an REO agent today, and also what does it take perhaps even to work with LPS if you're looking to expand your business. Also, the Orange County Association of Real Estate Brokers, we are doing our thing here in Orange County. You really should consider being a part of the organization. Go to ocareb.org and sign up, become a member. May 2nd, I'm so excited about this. Credit Smart. We're using the Freddie Mac program, rolling out Credit Smart through community centers and churches throughout Orange County. We are doing our first one May 2nd at Second Baptist Church. That's 4300 Westminster in Santa Ana. We're expecting a great attendance and a lot of participation, and it's going to be a great opportunity for our community to learn what it takes to buy a home, to deal with foreclosure, with short sales, and it's creating an opportunity for members of our organization. So if you're not a part of OKREB, really, there's so many reasons to be a part of our organization here in Orange County, and, of course, part of the national organization, because we're doing really some fantastic things, and we want to encourage you to join the organization. Also, please note your calendar. Every second Friday, we have a speakers forum at National University in Orange County. That's in Costa Mesa, actually, National University. And in May, we have Bank of America. Bank of America will be coming to talk to us. So please go to the website, get all the details on it. As far as the time, I believe it's going to be around 9 o'clock in the morning at National University the second Friday. And if you would like to learn more about our organization, come to our general board meetings. They are always every first Friday of the month at National University, and they begin at 10 o'clock. 10 o'clock every first Friday of the month. Our general board meetings, and there you can learn a lot about what's going on, what we've got planned. It's just a great opportunity to get to meet the directors yours truly, the president of the organization, and we would love to have you become a part of our organization. And in fact, Karla Dennis has agreed to become a member of our organization, and we're asking her to join our board, and she's agreed to do that as well. So we're really looking forward to having an expert like her. And in fact, if you take a look at our board of directors and our honorary board, you'll see they are the who's who in Orange County, the movers and the shakers. And so if you need resources, you need counseling, you need direction, you need help, we have the resources there at the Orange County Association of Real Estate Brokers. We're trying to do great things and have a major impact on real estate professionals. I want to tell you about our sister organization. I call them our sisters, my good friend, and at NAREP, the National Association of Hispanic Real Estate Professionals. I have been on the board of directors there for many years, and I'm looking to get back on and working with them and partnering with them. They're always doing some fantastic things. In fact, coming up on 5th of May, Cinco de Mayo, they're having a power networking mixer. It's at 5 p.m. at Ember Cafe and Music Club, 401 North Anaheim. I tell you, if you haven't been to a NAREP mixer, you don't know what you're missing. It's always well attended, lots of food, great entertainment. It's just a great opportunity to network and develop relationships. So check it out. It's going to be May 5th, 2011, 5 p.m., Ember Cafe in the city of Anaheim. Well, folks, I'm really excited about having Karla with us today. And, Karla, I really appreciate you joining us and being a part of our organization, and I appreciate you taking time with our audience today of The Power Is Now and sharing all this incredible information. I'm just as I speak to you and as I get to know you, I see that you are truly unique, being a successful African American woman, an enrolled agent, going through all the education and the credentials, and then being involved at a national level with the media and speaking. We're just very proud to have you on the show today and to have you a part of our organization, the Orange County Association of Real Estate Brokers. Folks, please be back with us next week. You do not want to miss Sharon Bartlett. Freddie Mac will be in the house talking about what does it take to be an agent with Freddie Mac and how to stay an agent. In fact, the flyer is out, and if you're not getting the flyer, please email me, and I'll make sure you get on the mailing list. Well, that's it. That's a wrap. Remember, we are at our best, and we maximize our success when we act now. Thank you for joining the Power Is Now teleconference.